Hello everyone, welcome to TSAM Digital. My name's Amy and today I'm joined by Dr. Michael Pahle, who is the working group leader for the Potsdam Institute for Climate Impact Research, which is a German government-funded research institute addressing crucial scientific questions in the fields of global change, climate impact and sustainable development. So welcome Michael, it's great to have you.
Thanks Amy, thanks for having me.
So today we'll be talking about net zero and carbon markets, which is really exciting and a bit different. We've not really covered this before. So just to get us started, because I'm not sure who in our audience is familiar with carbon markets, could you just kind of set the scene for us and tell us who the key investors are in this space? Because I know there's big corporate investment from firms going into this, such as Shell and consumer goods companies, who are looking to sort of offset their carbon. So it's not just traditional financial institutions in this space.
Well, the first thing to say about carbon markets is that there is not one single carbon market. So carbon markets are partitioned. There are in general two types of markets. The first one are compliance markets. These markets are implemented and driven by governments, so implemented as part of climate policy frameworks. And one example is the EU emission trading system, which is the world's largest such market. It has been in place since 2005, so actually for quite a time, marking the onset of serious climate policy at the EU level. And this is a vivid and a good example of such a market. And investors in these markets are apparently firms who are regulated under this market. So they have an obligation to surrender allowances each year at an amount that equals their emissions that arise from their production activities. And so these are mostly regulated firms like power generators or the energy intensive industry, which are the two main sectors covered by this specific trading system. A second partition is our voluntary carbon markets, and this is in a way, it's a relatively new phenomenon, or in a way, it's a relatively old phenomenon. It had been there, and the general idea had been there for quite a long time. And it's not about complying or surrendering certificates up to the amount or with the aim to reduce emissions over time, but it's with the aim to offset emissions. So if you're emitting in a certain part of the world in a jurisdiction and you want to make up for it, you can buy offsets from these markets. So this has been around for a very long time, actually, also already under the Kyoto Protocol, the first big international agreement on climate policy. But this never really took off for a variety of problems. But very recently, with climate action becoming a much more mainstreamed phenomenon that takes off around the world, there's a resurgence of voluntary carbon markets. And this, in contrast to the compliance markets, is mostly driven by large companies, tech companies or other companies that supply goods large scale for consumers with high environmental awarenesses. And so these companies are in the driving seat asking for offsets or certificates through which they can prove to consumers that they are operating or that their production is environmentally friendly, or even that they have net zero emissions for what they are doing. And so these are the two big chunks of carbon markets around, one chunk being the established parts of carbon markets, compliance markets driven forward by governments, and then this new phenomenon, voluntary carbon markets, which are really taking off, which are experiencing a gold rush, I would say. So there's enormous interest, especially from investors. And the one thing to add is that these two markets increasingly overlap. So what we are seeing in the last 2 or 3 years with a very high demand for environmentally friendly investments, that we also see what one could call ESG investments in compliance markets. So investments taken by enduring companies or others that want to green their portfolio, thereby in a way hijacking this compliance markets, which has triggered a very interesting political discussion. But at the same time, we are also seeing a move towards, or we are seeing voluntary carbon markets fulfilling traditional roles of compliance markets in the sense that they provide financial incentives to technology firms to develop net zero technologies, like, for instance, direct air capture, And this is a very interesting development to look out for, especially when it comes to how this overlap will unfold and the point of integration between the two markets.
That's fantastic, really good overview there. So you've kind of set the scene in terms of the motivations for trading in these markets and who the key players are. Could you tell us a little bit more about what this looks like on the ground? So, for example, how this is environmentally sustainable and what some of the business models out there in terms of the value chain of who is kind of allowing these companies to offset their carbon. So, for example, you know, it could be regenerative farming or any other kind of environmental projects that kind of give us these carbon credits.
Well, here again, one needs to differentiate between the two types of markets. And the compliance markets is relatively straightforward. So the certificate as part of the policy framework, and there's very straightforward compliance. So this is all monitored and verified very thoroughly through competent national agencies. And in the case of these markets, it's pretty straightforward. There's actually no need to ask the sustainability question or the quality question, because it's arising directly from reducing emissions. So there's a one-to-one relation to being environmentally friendly. It's different in the voluntary carbon markets, and there the question arises: what is the quality? What is the quality of the credit? What's the integrity of the market itself? Is it really sustainable? And this relates to typical offsetting issues. So where firms are buying these credits to compensate their own emissions. And so the typical project we are seeing is something like a renewable project or a forestation project that is usually developed in developing countries. So it's a trade around the globe. So it's not within jurisdiction, but between jurisdiction. And here, the quality varies, not by coincidence, but by design. There are different certification standards which ask for more or less quality in terms of how sustainable is it. Is it really additional? That's something important. So if you certify a project that would have taken place anywhere, then you do not have additionality. And these are very big issues. And we see an enormous differentiation in the quality of these standards. And I mean, a lot happens really on the certification standard and how much trust you put in the certification standards.
Okay, no, that's really good. Thank you for sharing that. I think really good to know. And then you touched as well on the different trading schemes out there, because there are obviously different carbon markets. So when we talk about the EU emissions trading system, I saw in the news that the European Parliament has voted to impose a carbon tax. So I'm not sure if you could shed some light on this and tell us what kind of implications this will have for people in that market.
Yes, this is actually a very important development, because implementing and extending carbon pricing has traditionally been one of the most difficult tasks in climate policy, because the cost of climate policy becomes so transparent and salient. And of course, everyone wants action against climate change, but nobody wants to pay higher prices. So this is a sort of general discrepancy we are facing. And there was a lot of political pushback to put a carbon price on the new system, on the sectors covered in the new system, which are buildings and road transportation, which in contrast to the industrial sectors are much closer to households, to consumers. So they are directly exposed to carbon pricing. And it had been a long debate to get this implemented. And meanwhile, there were rumors that this idea is dead already, but it survived. And this is absolutely essential, because it's really a main building block for the EU's plans to achieve carbon neutrality by 2050. And it will substantially enlarge the existing emission trading system. It will roughly double in size. And the system will start in 2027, and it will regulate around 75% of all emissions in the EU. So in other words, around 3/4 of all emissions will be kept and will be integrated in such a compliance system. And I think this is very important to watch out for and to prepare for by investors, because of course, similar to the existing ETS, it also offers a lot of investment opportunities. But one also need to watch out for new financial regulation, because so many new financiers coming in the existing system trigger the political debate on whether to exclude them and really to only allow compliance traders. So, I mean, companies that are directly regulated under the system into the system. So this is an open issue that will trigger an intensive debate, and I think this is very important to watch out for. But it's still very much under the radar of most observers.
No, that's great. We'll definitely watch out for how that debate pans out over the coming months and years, as you say. And looking beyond Europe then, so what are the systems like in other parts of the world? Obviously, Europe's a big hub for this in terms of where the action is in carbon markets, but I know California is a kind of an area that, you know, has a lot of interest, and there's some action there when it comes to investors getting involved. So could you tell us about the different schemes and if they're dealing with similar issues as well at the moment?
Yes, so the EU was the first emission trading system. It's the oldest, but in recent years, a lot of new systems have been set up, actually implemented or are in a planning stage. And you mentioned the regional systems in the US, which is the Californian system, but also the RGGI system, which comprises several states at the East Coast. We are having the Chinese system, which is now up and running. We're having a system in New Zealand, in Korea, but also in South America, in a continent where you would not necessarily expect it. In Africa, this is taking off. So there's a tremendous growth in the number of systems worldwide, which is tracked by the World Bank, which provides a lot of interesting descriptive material on this. And so this is really becoming a widespread phenomenon. And of course, it previews the idea that has been very popular, especially among climate economists, that eventually we will see a global carbon market where all these systems will become linked. This is at the moment, this has ever been an important political debate. It's not clear if this will actually take off, because the most important requirement, it seems, both politically and economically, is that the system is functioning properly and there's trust in the way it's governed. And so many of the systems are still relatively new. They need to be developed and they need to prove that they are well functioning. So this is something I think where the next 10 years will be enormously important to see if these systems operate in a similar way, both in terms of market rules and governance, and if there is potential to converge leading up to this great idea of a global carbon market. And so this is a very fascinating development also to watch out for. And at the same time, as I already mentioned, there's the development around the voluntary carbon markets, which are still very decentralized and fragmented. Currently, the debate about the integrity and the quality of the credits has put the market in a kind of state of analysis paralysis. So investors are wait and seeing how the question of the integrity will be decided. If it's good to go, of course they want to avoid ending up in a situation where all the credits they have bought are associated with some sort of greenwashing. And equally important is also the development around the Paris Agreement, because Article 6 in the Paris Agreement provides the umbrella framework for how countries deal with this sort of credits. And this is important because it's not just companies and investors who are engaging in markets, also jurisdictions. And some of them are already planning on integrating offsets from these markets into their nationally determined contributions, which are their pledges for the international climate agreement. So this is another interface that is arising, not just in the company level, but between companies and jurisdictions. And this is another very fascinating development to watch out for.
Yeah, lots of really good, interesting developments to follow here. So I know some of them are still in debate and we're not sure what the climate will look like in the long term. But in terms of your hopes for the markets, do you think we should have one global system? What are your kind of hopes for the next few years and which direction it heads?
I do think the current stage is now really that we are seeing a sort of gold rush and high excitement in setting up this market. There is much more demand for such markets as there is supply from the government side. So I think I really hope that this will continue. And at the same time, we have to improve the quality of the markets and consolidate. And a lot of questions are now arising that have been less relevant when prices were still low at, let's say, 5 or 10 euro per ton. Now we are talking about 100, 200, or even 300 euro per ton. So there's big money. This is really has become a large market and will become an ever more large market. And so the main challenge ahead is really to improve the quality and the integrity and find ways to link these markets in a long-term sustainable way, so that we are not letting it all widespread and diffusing in all directions. So we really need to have an overarching idea how to develop and connect these markets. And I think this will be really crucial. If we can solve this problem, I'm very optimistic that we can solve the climate problem more broadly.
Well, that's some excellent insight there, and I'm looking forward to seeing how it pans out and connecting with you as the situation updates as well. So thank you so much for joining us, Michael. It's been great having you.
Thanks a lot, Amy. It was my pleasure.
And thanks everyone for watching.